What's going on, everyone? Today was absolutely wild in the stock market, with 63% of the S&P 500 closing in the red. If you thought things couldn't get crazier, buckle up because the week isn't over yet, and there's a ton happening right now. From Nvidia's massive sell-off to tomorrow's critical inflation report, plus some big news from Meta and Trump, there's no shortage of drama. Let's break it all down. First off, let's talk about the bloodbath in tech stocks. Nvidia, the star of yesterday's earnings report, had a brutal day, dropping over 8%. This wasn't just bad news for Nvidia. It dragged the entire chip sector down with it. Companies like AMD, Qualcomm, and TSM, the world's largest chipmaker, were hit hard as panic selling spread like wildfire. Why did this happen? Well, Nvidia's earnings were solid. They beat expectations and showed strong revenue growth, but the market was expecting perfection. After years of massive gains in the chip sector, investors are now nervous and quick to take profits at the first sign of trouble. The result? A bearish feedback loop, with fear driving more selling and creating even more downward pressure. Now, here's where things get even more interesting. Tomorrow morning, just 1 hour before the market opens, we'll get the release of the PCE data, the Federal Reserve's favorite inflation metric. This report is a big deal. If the numbers show inflation heating up, it could signal that the Fed needs to stay aggressive with interest rate hikes, which would add even more volatility to an already shaky market. On the flip side, if inflation cools, we might see some relief. Either way, expect big moves when the market opens, so keep a close eye on the news. But that's not all. There's also some exciting news from Meta. The company announced that it's working on a new standalone AI app to compete with ChatGPT. This is a bold move, as Meta looks to expand its footprint in the AI space. They're even talking about offering paid subscription services for the app, similar to OpenAI's model. While this sounds promising, investors seem skeptical, especially after the underwhelming performance of Meta's Threads app. The stock barely moved on the news, but this is definitely something to watch as Meta continues to push deeper into AI. Now, let's shift gears to the political front because Trump's tariff drama is back in the spotlight. Today, he announced a new 10% tariff on China, set to begin next week. Tariffs bring uncertainty to the market, and uncertainty leads to fear and selling pressure. If you remember the 2018 trade war, tariffs between the US and China sent the market into a tailspin. While the current situation isn't identical, it's a reminder that geopolitical tensions can have a massive impact on stocks. Keep an eye on how this plays out, as it could add even more fuel to the fire. So, what does all this mean for you as an investor or trader? The key takeaway is simple: adapt or get left behind. This market is volatile, and volatility equals opportunity, but only if you're prepared. Whether you're riding the bearish momentum or waiting for dip buying opportunities, you need to stay sharp. Use stop losses to protect yourself, and don't marry the bull or bear side. The market can flip on a dime, and flexibility is the name of the game. If you're looking for ways to capitalize on the current market conditions, consider ETFs like UVXY, SQQQ, and SPXS. These are designed to move up when the market is in free fall, and they've been performing well during this recent sell-off. Just remember, these are short-term tools, so use them wisely. Let's circle back to some key stocks to watch. Nvidia is at the center of attention right now. After its 8% drop today, all eyes are on whether it can hold key support levels. If it breaks below $119 tomorrow, we could see even more selling pressure. But if it finds a base, there might be a chance for a bounce. Similarly, Tesla is another stock to watch. It's down over 40% from its recent highs and has been especially weak over the past week. The more time it spends near its lows, the more likely it is to see additional selling pressure. However, if it starts to respect support, there could be opportunities for dip buying. And don't forget about Meta. While the AI app news didn't move the stock much today, it's worth keeping on your radar. If the market stabilizes, this could be a catalyst for future growth, especially as Meta continues to pivot toward AI. Finally, let's talk about the big picture. The market is in a fragile state right now, and the next few days could set the tone for the weeks ahead. Between Nvidia's sell-off, the PCE report, and Trump's tariff news, there's a lot of uncertainty, and uncertainty breeds volatility. But remember, volatility isn't something to fear. It's something to embrace. Big moves create big opportunities, whether you're trading options, shorting stocks, or looking for long-term dip buys. So, to sum it all up, Stay adaptable, protect yourself with stop losses, and be ready to act when opportunities arise. The market is giving us plenty of action, and if you position yourself properly, there's a lot of money to be made. Buckle up, everyone. The week isn't over, and the excitement is just getting started.